Good afternoon, everyone, and thank you very much for joining this session on FX automation. Now, this topic of FX automation is very topical in the world of corporate treasuries, as you all are well aware of. I had pulled some very interesting statistics on FX automation. So the entire FX market has evolved significantly in the last 15 to 20 years. So 20 years back in 2001, the FX volume that was traded daily was about $1.2 trillion, of which about 85% was on voice, right? And only 15% was electronic. And fast forward to 2019, and it has completely changed. The landscape has totally changed. The volume traded is about 6.6 trillion, almost 5 times more. And 60% of it is electronically traded, and the voice part of it keeps coming down. Now, that is what has happened in the FX market side, but equally on the client side, also what we have seen is that the treasury teams have automated their FX workflows, right? Both for risk management purposes as well as for payment purposes. So we'll do a little bit of a deep dive, and my guest for today is John Murray from the Paysafe group, and Paysafe is a leading UK fintech company. He will share a lot of his experiences. John has a rich experience. I will not steal his thunder. So I'll first pass it on to you, John, and why don't you introduce yourself a little bit, and then we'll crack on from there.
Thank you, Seth. It's a pleasure to be here. Yeah, I joined Paysafe last summer, August 2020. Before that, I worked at BNY Mellon for 18 years in foreign exchange, primarily e-commerce and FX overlay and FX payments. And prior to that, I spent 12 years at Bank of America. I started in treasury and electronic banking and transition to FX. So as you say, I've lived through that significant change that you alluded to there, and it has evolved significantly. So as you pointed out, I actually think I thought the pace might have been quicker than it has actually developed in that period that you alluded to. So I'm at Paysafe as global head of foreign exchange, and it's a fantastic opportunity for me to transition from a bank to a payments fintech. And as I say, there's a great management company here. It's very exciting to be here at Paysafe, and exciting to be here talking to you.
Thank you very much. Thanks, John. So let's dive into it, right, into the topic. So let me start with a bit of a general question, a little bit. So in the the FX and the payment space has been particularly very hot in the fintech segment, right? I mean, that is where fintechs have really gained a lot of traction, have succeeded. And there's plenty happening there, right? It's a fast-paced market completely, right? In Paysafe, I think what you all are trying to do is slightly unique. I mean, it's a very interesting play. It's a very interesting business model. It's a consolidation of a number of different, fintech solutions. So can you tell us a little bit more about what is under the hood in the Paysafe group, right? What are the different components of it, and what is generally the strategy?
Yeah, happy to. So as you say, Paysafe is a many-coloured fintech, as I like to call it. We're a leading specialist in payments and payments platforms. We have three core businesses. So we have our three core businesses, our consumers and businesses. So we have a digital wallets business, which includes our money transfer remittances business, Skrill money transfer. We have our acquiring or merchants business, supporting merchant services, payment processing, and we have our eCash, so our prepaid card and online cash businesses. So, you could argue if we're looking at who are our competitors, we have many competitors. It could be PayPal, it could be Square, it could be Revolut TransferWise. So we're very broad brush in terms of our capabilities and distribution. But primarily what we do is provide services and safeguarding for our clients and their digital monies, and through an efficient ecosystem, if you like, where we're allowing them to transact and process access for merchants and consumers and vice versa.
Fantastic. And I think one common denominator, I guess, is FX, right? In almost all your lines of business, there is a significant element of FX, right? That's kind of safe to say.
Yes, I would say it's one of the lowest common denominators in any cross-border transaction, and we do a lot, is foreign exchange. You're quite right. So that's one of the reasons I'm here to help look at that and look at ways we can make that a better process generally.
Fantastic. So just speaking to you previously, right, I'm aware that you've come in into this role, and you're looking at a bit of a treasury transformation, if I can use that phrase, to automate a lot of your FX processes. So you've spent a few months already there. You've done your homework. So in terms of how do you want to go about this automation journey, right? And what is the role of the treasury? Because when you do these treasury transformation within organizations, right, it's not only the treasury, it's other parts of businesses, including your product management, your technology partners, compliance, legal, and everyone. So tell us a little bit about what's the roadmap and what's the role of the treasury in this transformation exercise.
Sure. So I actually work in the banking division, which is a relatively new business unit that's set up, at group level to support the businesses, the core businesses I mentioned. So we actually work alongside and collaborate closely with the treasury team. And I think it's, to your point, it's also all about integration right now. I think the last year and COVID impact has really highlighted, I think, the need for treasury function here and in many places I expect to be more reactive than proactive, right? Which by that I mean there's been a much greater demand for a more consistent view, consolidated view of activities that are either being conducted internally by the businesses or with external banks and parties. So I think it's interesting. I think I might mention to you before, when I joined, someone sent me a schematic of the sort of treasury management system and all the connections, and it reminded me of one of those British Telecom green cabinets you see when you see the engineers with thousands of little cables. Right. It was quite frightening when I saw it, but that gives you a sense of the level of complexity we have with the businesses, the multiple platforms and processes, and bringing it all together. Just give you a sense of what we've been trying to do from a treasury perspective, consolidating that multiple set of data streams, and they're using lots of different formats and technologies, but you're trying to give treasury a holistic, but I'd say a sensible, simple view of our cash and where it is and what it's doing at any point in time. And I think that's been one of the sort of serious impacts we've seen in the last year or so for treasury around the COVID impact, right? Is to get much better sense of fingertips of what's going on with cash and what we're doing with it and how we might need to pull it back or make use of cash more readily. So for me, coming in to look at FX, I think the approach is very similar. I've been looking at the legacy processes that we have through the businesses, again, multiple businesses, platforms, data streams, and even I would say more just the general nuanced FX that's conducted through the different businesses. There's a different flavor, transactional FX, different types of transactional FX. And as you can imagine, with a fintech company, we are dealing with lots of different payment methods as well, from, bank transfers to card transfers to digital wallet transfers. So there's a huge amount of complexity, I would say, that we're looking at, and we're trying to take the approach of how we could centralize that and have a much better visibility and transparent view of the activity, same as treasury. But then that will be enabling us to be much more efficient and drive a much better, lower cost model to support the businesses.
Fantastic. No, thank you very much. I mean, speaking to you, and I've seen multiple situations as well. All right, these automation, the reward of this automation could be significant, right? Both Absolutely. On the FX risk management side as well as on the transaction side, as you mentioned, right? So, no, thank you very much for that. Kind of a related question, right? Yours is a very competitive space, right? Particularly the FX and the payments part, right? And there are some well-known fintech brands as well that you are competing against, right? So a difficult question for you, maybe, but how do you plan to differentiate against such competitors? Because it's the usual things, right? The speed of execution, the price transparency, the user experience. So what are some of the areas that you want to highlight to your end clients?
I think you just sort of touched on it, really. I mean, what do we want ultimately is to have best price, hedge it where we can, and the fastest payment means and settlement process. So, if you sort of take that back and decouple that, that really is our primary aim. Certainly when I look at payment processing and FX, will be to make that as riskless and frictionless as possible in terms of not only our internal ecosystem, but how we're then delivering services to our consumers and businesses for any payments or transactions that they want to process globally, anywhere in time. Right now, there are challenges within that frictionless environment because it isn't frictionless today. And honestly, it's not going to be for some time. There are many regulated markets where it's particularly a challenge, and a big challenge for foreign exchange to support that process. But I think, we look at it that we want to be and remain competitive. It's important that, you're in a space where the consumer can be very, I would say, their loyalty, they can be fickle, let's put it this way, right? And they have the ability to move around and change services very quickly, as you know. So I think that's a primary driver as well, is retaining loyalty of customers so that we can recycle monies. If they deposit monies with us, we want that money to stay in our ecosystem for various, whether it's then, and it's how we recycle, retain, and actually grow that distribution with consumers and merchants for that matter. I mean, clearly, the last year with COVID has seen some aspects of our business model change where we've seen increased demand, but we've also seen that we've lost demand depending on the type of activity. Clearly, there's been a lot more demand around sort of online aspects, subscriptions to things like Netflix or Spotify or these type of companies, as well as online gambling and gaming type facilities. Those type of areas have seen growth, but at the expense of, say, where you would see more traditional areas like travel and airlines and stuff, where I saw some statistics, we've slipped back to the 1970s in terms of the amount of flights there are today. That will change clearly, and we see signs that will start to rebalance correctly, but it's clearly allowed us to be much more because of our broad distribution, it's enabled us to adapt better in terms of our market and models. So we're not one size fits all. We've got many solutions for many clients, for many products, as it were. But it's also important for us, as I look at what if we wish to remain competitive, so it's important that we look at the collaboration and our relationships, whether it's with our banking partners or the various sort of different types of payment partner you might have out there. So I think it's, from my perspective, when I look at the FX component, it's there to enhance the overall business opportunity that we see, whether they're looking at how they can increase their revenue or increase opportunity. Generally, FX has a critical role to play there to help enhance and make that process more efficient. So I think we want to really look at where we can outsource more risk, FX risk, certainly. But I also think at the same time, we want to be able to give the businesses much more localized, real-time competitive pricing and put that at their disposal. So I think that, is remaining and continuing to be competitive, across the various businesses we service, I think is critical right now.
Fantastic. Now, you did touch upon some of the areas, right, about outsourcing some of your risk management to banks and other providers, right? So my follow-up question is exactly that, right, which is around this discussion on fintech and banks. It has kind of evolved significantly in the last 5 years or so, right? And I think it's safe to conclude right now that it is more about collaboration, right, than anything else, right, between the banks and the fintechs, right? And I see that collaboration is almost like a two-way street, right? I mean, the banks provide services to the fintechs. They also consume services from the fintechs, right? And in the world of FX, I think it's quite complementary, right? Because banks are the big market makers and can warehouse risk effectively, and also have access to the payment rails to be able to make delivery of those FX payments, right? So, what are some of your thoughts, and how do you see this collaborative nature of relationship kind of evolving?
I can only see it continuing to grow. I think it's absolutely vital. Early day talks of disruption. I mean, that's definitely been replaced by the need to achieve greater collaboration. As you say, the banks are the risk warehouses. They create warehouse risk. Absolutely, fintechs need the banks to function in that respect, right? No, I'm not. That's not a monopoly. That's just a function. Same as Philips are good at making light bulbs. Banks are good at providing FX risk management. They make those markets. So I think that will continue to grow and collaborate and look at ways that we could be more innovative and offer joint solutions where it's mutually beneficial for banks and fintechs to collaborate, whether it's to look at how they distribute products jointly or collaboratively into new corridors and markets, or just look at ways that they can, develop and build new solutions together. Because at the end of the day, it's self-servicing. The banks give access to liquidity and FX. The fintechs give access to broader reach of markets and consumers. So ultimately, they're feeding each other. So I absolutely see that collaboration continuing and working much closer together. And I think it's just, for me, a natural progression, really, where they will come a lot closer together. I think the banks have maybe looked at it historically, thinking, well, we'll build out some of this capability ourselves. But I'd like to think a lot of that thinking and mindset has changed into more, well, why don't we outsource where we can to someone who specializes in a specific market or method or payment, whatever it might be, because it's a lot easier, rather than to build, it's easier to sort of actually bond with someone and collaborate, especially when we look at time to market. I think time to market now is so critical. First to market, there is some advantage, but I think it's just a question of getting there in mass and making an impact as well.
No, fantastic. No, thank you very much, John. I mean, that is exactly what we see in Barclays as well, right? I mean, we work with a number of leading fintechs, and that's what we see. As market makers, we are very well placed to warehouse the risk and manage the risk at our end. And the clients, both corporate as well as fintech clients, right? The clients who are able to automate their workflows completely and then tie it with ours, generally reap the rewards, right, of this, of the automation journey. Now, in terms of, go on.
I was just one comment I was going to make around that will be this view of. I know there's been some talk about disintermediation with the banks, with peer-to-peer and stuff, and I follow that very closely. But I still think banks sit within that equation regardless, right, as a sort of credit intermediate in the first place. So I think there's a lot going on in the space, I think, that's trying to sort of change that relationship. But I think they're still going to stay very close together, corporates and fintechs, with their banking partners.
I completely agree with that. Now, the other point that I want to touch upon is I did allude to it at the beginning of this conversation, right? This five-fold increase in the FX volume that is traded daily. It's been powered heavily by technology, right? The adoption of technology has meant that the entire FX journey, I mean, from pre-trade to post-trade, right, has become completely automated, right? The speed of execution has massively increased, right, and that has resulted in significant benefits to the end clients as well, right? So, what are some of the new technologies you're seeing which could be particularly helpful for our clients like corporate treasuries and others in terms of FX automation? I mean, the ones that I hear of definitely are things like APIs, because APIs just help with that integration of platforms much easier. The other ones are machine learning and the user interface that you provide to end clients. So, what are some of the hot technology topics that you generally hear about?
I think from my perspective with foreign exchange, it's clearly around the APIs and that sort of integration, twofold, integration that we're trying to achieve with our banking partners so that we can consume foreign exchange rates as quickly as possible in their different flavors, but also how we can then offload the risk back to the banks as quickly as possible. But equally, then how we, when you're in certainly a business like Paysafe, which has multiple businesses, how we create that sort of simple proxy layer, if you like, so that we can integrate and be business agnostic, right? It's not siloed anymore. You're trying to create this sort of group unitized view of activity, which in itself creates a lot of advantage for Paysafe. But I think that's generally the sort of function of treasury, corporate treasury, is to create that more centralized hub capability to have good view of activity and how you manage that activity. So I think API components are, they've been around for a long time. I mean, I used to talk about APIs back in the 90s, right? So we used to have machine interfaces, but they've certainly moved on from those days. Whilst there is still file transfer, it is definitely moving on in terms of the speed and efficiency. But to your point, with that now, we're seeing more of that being overlaid with the machine learning and the AI and bots that can do certain, what I would call administrative type functions to support that. I mean, one big thing for us is always going to be how we can deploy those type of bots, AIs, or machine learning into our ecosystem, because we're going to have lots of repetitive tasks, whether it's scheduling and running reports, it's doing certain reconciliation checks, tolerance checks. But I think, longer term, we want to look at, given some of the markets that we cover, how we can basically detect and monitor anomalies in the ecosystem, whether it's looking for bad data that we want to isolate and control, or just, bad transactions, if you like, that we also want to isolate and control. So I think we're looking, around how we're providing that much more sort of a safeguarding mechanism that controls the flows within our business. But I think as it leans into our partners like the banks, equally we're going to be looking and reliant on them to help us sort of bridge some of those gaps where, I think we both would have common interest to look at these type of areas where we want to build much better, mousetraps so that we can control the type of flows. I mean, especially, I think, to your point, digitalization has been on steroids the last 12 months or so because of COVID, right? We've seen a huge ramp up, move away from cash. And clearly with that, you're going to see an increase in potential fraud and areas where there's always going to be, someone that wants to move with that, but in a bad way. So I think we all need to be much better at how we detect and stop bad guys entering into these systems, right? And providing a good, fair and transparent service for clients. I think one other thing for me will be how we work around these bureau type services, the banking as a service and remittances as a service. And I think clearly we're exploring and looking at an approach where we can offer more of a full service provision for our consumers and particularly our merchants, build out our sort of e-commerce platform so that we can provide a launch pad for, small, medium enterprises that want to, create and launch a digital platform and have everything that goes with it. Sort of laid on. So I think there's a huge growth there, and I think those type of as a service platforms are becoming much more pronounced, I think, now, and how they're being developed. I mean, to me, they've always been the same thing, a sort of a bureau type service, right? So again, is outsourcing, right? A lot of these businesses simply don't have the infrastructure, the manpower, or the inclination to do all that, right? They want to be up and running as quickly as possible, and much of that now can be provided to them as part of a package solution. So I think that's very much the space we see that we'll continue to play in and grow in.
Fantastic. Now, I think it's a good time to take a question which has come in, right, which is kind of related to this in some ways, I would think. Now, the question is, the way I would sum up is regarding open banking, right? Particularly, how is this space evolving in the UK market, right? So let me give my thoughts on that, right? So my thoughts are, quite similar to what you just, kind of mentioned, right? So there were some regulatory changes which happened a few years back, which made open banking a lot more easier, for independent players to develop open banking solutions, particularly in the retail banking space. And same as well in the corporate space as well. There are benefits for the clients as well, right? And this kind of related to each other, right? I mean, what we discussed about APIs and things, right? Like REST APIs and all, right? So I think that is definitely the direction of travel that we are seeing, right? Now, certainly the fintech clients are always in the lead because they lead with technology, but also there is increasing demand coming from corporate treasury clients as well, right? So basically what our clients are saying is that we want to consume services, whether they're retail banking clients or they're corporate banking clients. I think the voice is exactly the same, which is we want to be able to consume services from you and from multiple players in the easiest manner possible, right? And the easiest manner possible is typically APIs or REST APIs, right? And that is where the banking community is investing heavily as well, right? I mean, it is so easy these days to even create an app, right? I mean, you want to create a weather app, you'll probably get the entire weather data on the web through REST APIs, right? And if you just know some basic programming, I think you can create an app, right? So I think that's definitely where this world of FX and payments is headed as well, which is increasingly banks like ourselves will expose our APIs for clients to consume, and then you can then integrate it into your tech platforms in the easiest manner possible, right? And that has huge benefits. I mean, one of the things that we see is when we provide automated solution to our clients, the onboarding times can be longer, and very often it is because of a lot of heavy lifting that has to be done on the tech side, right? So if that part of the journey in the automation, in FX automation, is kind of simplified, then yeah, there's certainly a huge amount of upside for our clients, right? But anyway, what are some of your thoughts on that as well?
Yeah, I totally agree with you. I think it's really, look, there are, whether it's a retail, it's a consumer, or it's a corporate treasury, I think everyone now wants to get a good holistic view of their activities, whether it's cash, their investments, whatever it might be. So clearly the open banking has created that sort of appetite for sort of aggregation type services, right? One-stop shop. I just want to see everything that I have at my fingertips in one place. So, that's, banks looking to do that, but equally there are third party, the fintechs and vendors that are asking clients to open up their bank accounts to get access to that data. So, it's a huge change, right? That whole, years ago we used to talk about, how wouldn't it be wonderful if we could give our clients, corporates and institution clients, access to our back office so they can look at the activity and see what's going on, and look at it more like a sort of DHL type service where you can see exactly where transactions are in the process. And this to me is just an expansion of that, right? It's providing, that rich content delivery of, your balances, transactions, how you can switch between these type of services. And I think for banks and ourselves, it's a branding exercise as well. I think banks, they're not bricks and mortar anymore, right? They really have to embrace the whole digital world that we're living in today and sort of represent their new brand of banking. If I look at the younger generation, I think they probably wouldn't even think about high street brands as such, right? The banks, even though they advertise on the telly, they're very focused on how they can pull that activity, and aggregate the content to look at it. So I think from a payments perspective, I think it's just going to continue to consolidate, right? The way that the end user can access and process corporate. I think corporate treasury been looking at this for a number of years, right? They want to be able to look at how they can get good visibility of all the activity, whether it's on a centralized or decentralized model. And I think how open banking supports that, it will give them the opportunity to bring together and get a much more holistic view of what's going on with their banks and the type of transactions, because big corporates have, relationships, they have lots of bank accounts, and it's, it's not efficient in this day and age to maintain a sort of siloed approach to that. It's efficient to bring that all together and get a good strong view of what the activity is, and as I mentioned right at the start, get a simple view of what's going on with their cash at any point in time and that working capital.
No, fantastic. I think you made a very good point there. I mean, particularly the large multinational corporate clients, right, who operate in, I don't know, 100 countries around the world. It's not unfamiliar. I mean, I've had many instances where I've heard they have thousands of bank accounts, right, and sometimes spread across maybe 50 odd bank relationships globally, right? So when you're managing a central corporate treasury of that nature, it can be very complex, right? I mean, just to see your cash at one place, right? And if the entire banking landscape does move towards that open banking and API type of an ecosystem, I think there will be certainly a huge amount of benefits. The only thing I might add, though, is that the only kind of headwind for this entire open banking APIs and the other thing, it's not a headwind, but it's kind of a consideration, is the cyber part of it, right? The security and the cyber part of it, right?
Absolutely.
And that is why, I think when you see the adoption of some of these technologies in the consumer, the online retail space, right, it's massive, right? It's accelerated massively, right? As I was saying, right, it's dead easy these days to create a simple app, right? Because you have the APIs available for variety of services that you need. But the cyber angle kind of makes it a little more complex in financial services, right? Because at the end of the day, you want your clients to stay safe, right? And you did allude to
Absolutely.
things like fraud and other things, right? And not to mention, financial crime and other things as well, right? So those are kind of considerations. I won't call it a headwind, but I think those are considerations which become a lot more important in financial services as compared to some of the other categories, right? And that's a very useful one. All right. I think I'll come to my final question, and no discussion, particularly in FX, is complete without making a mention of crypto. There has been a massive development in that space. I really do not know much about it, but all I can say is it has some characteristics which are very similar to the FX market, because in some sense it looks like a currency. Well, probably is not a currency, but it kind of gets treated a bit like currency, but slightly in a different way. So Paysafe has had some experience, right? I mean, you have a part of your business which is focused on
Mhm.
crypto. So what have been some of your learnings or insights? Anything that you can share with the audience would be very useful.
But look, to be honest, I'm not that close. So as you say, we have a crypto business, that launched last year. We also are looking at stock trading as well. So, look, I look at them from an FX perspective. Simply, where there is cross-border transactional flows, as we mentioned earlier, FX is the lowest common denominator. So there will be a requirement for me to support that, for us to support that FX in due course. And I think it's really where again, when we look at our businesses and the demands of our consumers and merchants, clearly there is more appetite to introduce crypto into that mix as an alternative, payment method, if you like, as well, right? So it's just early days, I would say, but I think I'll be looking at the same as I would look at any approach to FX. It's another use case that we identify, and then we just need to make sure that we can manage that efficiently, both from our perspective and the risks, but also providing good service for our clients, the consumers and merchants. Yeah, I'm not sure, like you are following all the press, a lot of noise about GameStop and Bitcoin and everything else. It's huge now, right, with Tesla and the changes there. But someone said to me recently, and I know I mentioned it to you, that, getting into crypto is a bit like walking into a big football stadium. It's very easy. But when you want to leave, the exit's like a little bathroom window you've got to get through, right? So that's part of the challenge now, I think, is really just opening that up and making sure that it's regulated correctly as well. To your point, I think when we look at fraud, cyber, all these, we need to make sure that we've got strong oversight and governance around all of these approaches, us, but I think the market generally, in how we want to offer these type of services. So I think that definitely goes hand in hand with collaboration. We need not only with the likes of your good selves, but also the regulators and anyone out there that helps bring that sort of discipline around these new types of asset classes, if you like.
Perfect. Thank you very much. So on that note, we can conclude the session, I guess. So John, thank you very much.
You're
Thanks a
welcome.
lot
Thank you
for
very
sharing
much.
all your insights, and wish you all the best in the treasury transformation journey that you're doing at Paysafe. And we're always, happy to help.
Thank you.
On that note, we can conclude the session. And just a reminder for the audience that the recording of this event will be available on the event platform. So please feel free to review that. And thank you very much. Thanks a lot. Bye.
Thank you. Bye-bye.